Joseph Carlson. Joseph Carlson has a brand new video out here I want to react to. I just got done watching it and I thought this was a great video to react to here today. Why I'm not buying Tesla stock. Now, in this video, I am going to basically kind of go through some different points that Joseph obviously makes in this video. And I have definitely some big disagreements, and I do think Joseph is bringing out some of the same talking points that I think a lot of folks have kind of reiterated over the years when it comes to Tesla, right? And to be quite frank, let's just be honest, like Tesla's, a lot of people are trying to figure out right now, is Tesla a great stock to buy over this next 6 to 12 months, or is it a very bad buy and it's not a good deal and those sorts of things, right? And I think that's what everybody's trying to figure out. It's a super famous stock. It's given tremendous returns to investors over the past 5 years, over the past 10 years, and ever since the company went IPO essentially. And with the stock being down as much as it is this year, everybody's trying to figure out, is this the deal of the century? Should we be loading the boat over the next few months, or is this like a no-touch situation, right? And so I think it's a very interesting video to react to and for me to share my opinion on this, okay? Let me say a few things up front. First thing is I appreciate Joseph Carlson for coming out with a take that is contrarian to a lot of folks, right? It's why he's not buying Tesla stock. And so I always am appreciative whenever somebody goes against, I think, kind of like the overall perspective maybe that's out there right now, right? And I know from the Wall Street side, they're in kind of a no-touch situation right now, but I think most folks on YouTube definitely are of the belief that Tesla's a great buy right now and should be for the next several months here, essentially, right? And Joseph Carlson, definitely one of my favorite YouTubers on the platform. I try to definitely check his channel every once in a while and check some of his videos out. And we have some stocks that we both invest in that are the same companies. Some stocks I'm invested in that he doesn't like. Some stocks he's invested in that I don't like. But there are several stocks I know that he owns that I also own. And I always appreciate his perspectives, and I love to kind of hear his take on whatever's going on out there. So, if I had to argue with somebody and debate somebody with stocks, he would definitely be up there. Maybe my second guy, probably like the second guy that if I was like somebody I'd love to just debate with on a consistent basis as a YouTuber, that is, right? I think he would probably be number two. I mean, we all know the number one would have to be Kevin, right? Because him and I, we just have a history of going back to Millennial Money, of debating stocks and the markets and all those sorts of things, right? But I think Joseph Carlson and I would be able to debate back and forth in a very respectful manner in regards to obviously stocks in the market, and I definitely always appreciate his take. So let's go ahead and get into this, guys, and let me know in the comment section kind of what your beliefs are around Tesla. Do you think this is a great buying opportunity over the next few months, or do you think it is definitely a no-touch situation over this next 6 to 12 months, essentially? Let's get into this.
My prediction, long term, that Tesla will be the most valuable company in the world.
Tesla will be the most valuable company in the world. That is what Elon Musk just said December 22nd. So that was very recent. Just this month, he repeated his prediction again that he thinks his company Tesla will become the most valuable company in the world. Now, he's even made comparisons that he thinks it will become worth more than Saudi Aramco, more than Apple, and more than all these other companies combined. A massive multi-trillion-dollar market cap company. And these predictions are ones that lots of people hold. We have Steven from Solving the Money Problem, a very popular channel on YouTube. He's basically all in on Tesla. That's been his portfolio for a long period of time. I think he's done really well on it. And his prediction is that Tesla, like Elon Musk, it will be the most valuable company in the world with a multi-trillion-dollar market cap. We have Jeremy from Financial Education just putting...
So first off, Steven Solving the Money Problem. I think he's arguably the most bullish bull on Tesla. I mean, some of his praise predictions around Tesla, and if you go through his bull case and whatnot, they honestly make somebody like myself I'm a big bull on Tesla, and I'm a huge believer of this company. Like some of my expectations for this company, for its market cap in the future, net income and revenue, I mean, they look like small potatoes compared to Solving the Money Problems. Holy smokes, he's in a whole different kind of stratosphere with his bullishness there.
video, I think yesterday, where he gave his base case for Tesla, implying that it would have $50 billion of net income and again have a multi-trillion-dollar valuation. So I'm aware I'm surrounded by a lot of YouTube channels that are very bullish on Tesla. They think this company is going to be massive, it's going to be huge. They have lots of reasons to back that up, and that comes at a time where the stock is down big. It's down 72%. So naturally, a lot of people are asking the question, is this a good time to be jumping into Tesla? And I've asked the same question. I've come to a different conclusion. So I'm hopeful that in this video, I can share an opposing view about Tesla of why I'm not buying the stock without being labeled a hater. I don't have anything against anybody that's invested in Tesla. I don't think that they're dumb or stupid or anything like that, but I think it's good to hear opposing viewpoints with any company. And I think if you get into the attitude of only hearing viewpoints that reaffirm your biases, it can cause a little bit of an echo chamber. So in this video, I'm laying out why I'm not investing in Tesla, why I think this company has way more risk inherent in the investment than most investors are giving it credit for. I think it's a much riskier investment than most people realize. And this is something that I've done routinely, and I hope these videos are valuable. I hope these different contrarian viewpoints are valuable. I've done something similar with Palantir. When it was trading around $30 per share, I made a video about why I'm not buying it. I think the company had a lot more risk. I think investors are too enthusiastic. I think they're predicting too good of a future for it. Palantir's at like $6 or $7 a share now. It's down 70%. During the peak of ARK Invest's hype, February of 2021, I made a video warning about ARK Invest, how I thought it would have low prospective returns. It's down to 80% since that video. And so I like to make these opposing viewpoint videos because I think they can be helpful when you're doing research. And I think this one will be helpful to consider even if you're a Tesla investor. That would be the hope here. So let's go ahead and jump right in. We'll bring up Tesla here. And the big thing that's drawing it.
One point I'll just bring up here right off the bat, right? He was mentioning about Palantir. He was mentioning about ARK, right? And obviously when he was talking about those were pretty much at, I don't want to say the peak of ARK or the peak of Palantir, but pretty dang close, right? So it's a very different situation between those and obviously Tesla, because Tesla's something that's down, roughly 70% or so this year. So it's at a very different point in time that I think making any statements about it, I think is a much tougher environment, right? Same thing if you were talking about Palantir now. I think it's hard to be bearish on Palantir now at $6 or $7 or whatever the share price is right now, right? I mean, it doesn't mean it can't go down more in the short term, but it was much easier to be bearish on Palantir, obviously, when it's a $30 stock versus a $6 stock, because the company has a great business model, a great balance sheet, and obviously some pretty exciting long-term prospects.
To Tesla stock recently is both that the CEO, obviously Elon Musk, is an attention-grabbing person. Tesla is an attention-grabbing stock. It's always been that way, but especially so over the past 6 months because of the breathtaking fall of the company. Now, I've seen a lot of dramatic falls of companies. We've seen Meta, we've seen PayPal, we've seen Netflix, we've seen a lot of companies fall, but none quite like Tesla, because the size of this company was massive, $1 trillion market cap, and it's down 73% year to date.
Meta was right around the same. If you look at how much market cap Meta lost, especially when those share price went down, Meta hit the 80s in the lows. It was in the 80s range. And so if you look at market cap wise, Meta was right in line. Tesla might be a little bit more, but it was pretty dang close.
Then if we look at it in just the past 90 days, 3 months, it's down 59%. We look in the past month, 1 month, and it's down more than 1% a day, down 40%. This is a breathtaking, dramatic fall. And there's been a lot of finger pointing. People blaming Elon Musk blaming the Fed. It goes on and on. People blame different things, but regardless, that is why people are focused on Tesla. Now, what does this fall do? Of course, it makes the valuation cheaper for Tesla. So people are wondering now if they should buy the dip for the company. And I think that one question is reliant on one other question. The other question of whether or not you should buy the dip is reliant on the question, is Tesla a car company? This is an important question for Tesla investors. Listen to Gene Munster call in on the phone for CNBC. I think he accurately portrays this question.
I forget which of the panelists talked about this today, but is this a tech company or a car company? And I think that, to me, is the bigger question. If you think it's a car company, you shouldn't own it. This means that they're going to have minimal market share, that their margins will go away, that other companies are going to catch up to them. If you think they have some sort of competitive tech advantage around manufacturing, whether it's FSD, batteries, that will yield higher margins than typical, and there's a massive a market that they're getting into. So, Melissa, 80% of this is the vortex over the next month. I think the bigger question investors should be asking here is this a car or a tech company? If you believe it's a tech company, I think you should own it here, despite what the stock is trying to tell us.
You know, and I want to spoil the point that Joseph's about to make, but I think one of the cardinal sins that a lot of folks don't understand around Tesla, because they try to just put it into this category of like this product that no one really cares about, and it's just like the hardware product that's important when it comes to Tesla, when it's way bigger than that. And I think it's a very similar problem that people made with Apple. You know, when it comes to Apple, a lot of people assumed like why would you get an iPhone? Like, there's better hardware devices out there. But the thing that everybody loves about Apple is all the little things, right? And all these things that won me over as a consumer into the Apple ecosystem, and I've been kind of stuck in the Apple ecosystem ever since, right? Apple had all these little features and great things about it that were ahead of its time. Things like, for instance, texting from my iPad and being able to take a call from my iPad, the same with my phone. Apple was ahead of the game on all that, and be able to respond to messages on my MacBook, right? And all these different little things in the ecosystem. There's a lot of small things that kind of like add up, that next thing you know, you're kind of in the ecosystem, you realize I can't really get out of this thing. Like, I could, but I don't really want to. And so I think when it comes to Tesla, as somebody that's owned a Tesla for years now, right? My first Tesla ever was the Model 3. My next Tesla is the one I still have, the Model X. And then my next Tesla after that, which I still have, is the Model S Plaid, right? And I can tell you what makes those cars special is not just the driving ability, is not just like the acceleration and how fun it is and those sorts of things. It's so many like little things that Tesla does on the software end, on the infotainment area, and on the maps, and like just these little things. And like, for instance, me being able to go up to the car and it recognizes that it's me getting in, and the seat gets ready for me, right? Because I'm 6'3" and my wife's a pretty small person, let's just put it that way, compared to my size, right? And just all these little teeny things that the car does. And there's like a million little things I could run through with you guys, that it makes it like impossible for me to get any other car now. I could get another car, no different than I could get a Samsung, or I could get a Google phone or whatever, right? But I wouldn't want to. It would make my life worse if I went another route, right? Because of all these little things that Tesla and Apple have understood that makes the experience so much better. And I think that doesn't get enough credit, and it's not understood enough around Tesla yet. It is understood now on Apple, but it took a long time for Apple to get there, where folks, it really clicked in their brains about, oh, this is more than just the hardware phone. It's about everything of these little teeny things that Apple does so well, that kind of suck you into the ecosystem and make this product a much better experience than competitors, and make you not want to get another product. Like my next car, whenever that is, will probably be the Cybertruck, will be a Tesla. And the next car after that will probably be a Tesla. Like, yeah, like, you know, maybe someday it changes, but I just don't see that happening. And so, and I think there's just a lot of me's out there that are going to experience a Tesla and be like, damn, this is the best. It's only down from here. So, you know, that's kind of my belief on that. But let's hear kind of what Joseph has to say here.
Long term, it goes higher.
And to understand why this question is so important of whether or not Tesla is a car company or a good tech company is because of the implications in those definitions. If you're to break down the differences between a good tech company and a car company, it looks something like this. Good tech companies have high returns on capital employed. They're typically asset light. They have high gross margins, high profit margins, high operating margins. They have reoccurring revenue. They're highly scalable. They also have high barriers to entry, large network effects. They have a lock-in, creating a moat. This is what...
You know, this is interesting because I've always felt like Tesla's most direct comp is Amazon, right? And everybody considers Amazon a tech company, right? And I believe Joseph owns Amazon stock, and I'm also somebody that's bought this stock in the past, well, for me personally, it's been the past few months, right? And Amazon is not asset light. Amazon's not high gross margin. It's not, basically most of these things, if all these things, it's not really, mostly Amazon. It's just interesting to kind of see that, right? And different tech companies meet different requirements, right?
Defines a good tech company. Now, a car company, on the other hand, is very different. Car companies are not good companies, period. It's not a good industry, not good.
Traditionally, it has not been good, right? Very similar to how the cell phone manufacturing industry wasn't that great of an industry until Steve Jobs completely changed the game. Very similar to how Elon Musk has completely changed the game, right? And so I think that's an important thing. Just because an industry hasn't been good traditionally doesn't mean it can't be extremely good, okay? And so that's just something to kind of keep in mind there that I think maybe Joseph's missing here, and I think a lot of people miss that.
Place to be. Car companies have low returns on capital employed that's also very sporadic. Car companies are capital intensive. They face intense competition. They're highly cyclical. They're sensitive to the economy. They sell a product that's not a recurring purchase. Rather, it's a one-time lumpy expense that the lifespan can be extended for years during economic slowness.
One of the great things about Tesla is how many little recurring things they're going to have in their business model. They already have and are going to expand. And I've been talking about some of these recently. Like both my Teslas, I have the $10 a month plan or whatever it is, $10, $12 a month for basically kind of like all the infotainment stuff for like satellite maps and streaming and music and all the different awesome little services like Tesla Arcade. You get all these different services for $10 or $12 a month, right? So basically Tesla makes $20-something a month from me, every single month, right? And I'm sure there's a lot of me's out there that are signed up for that, and there are going to be a lot more as more Teslas hit the road, right? Full self-driving is $199 a month. I'm sure there's going to be, especially as that technology gets better and better over the coming years and there's more and more cars on the road, there's going to be a whole lot more people that will end up signing up for that at $199 a month, right? And so, you think about, obviously, if you're talking about maintenance of the vehicles, right? There's very little maintenance that goes into a Tesla, but at the end of the day, as the fleet gets older, there's going to be things that happen, right? This part breaks or that part breaks, and that's kind of almost becomes a recurring revenue stream for the business model, right? Obviously, there's a supercharger network for the company, right? Then there's things obviously Tesla wants to get huge into the insurance game, right? Through Tesla Insurance, which guess what? That's going to be a monthly recurring business for the company, right? So I think Elon and the team have really figured out they're going to be way more than just no different than cell phone companies for a long time. It was, we're going to sell you this cell phone and then that's it. Our relationship's over. We sell you a cell phone and have fun. And Apple took that game and they said, no, we're going to sell you a cell phone and then we're going to sell you another cell phone in a few years from now because that one's going to be even way better than the previous cell phone, right? And then also we're going to have our app store in there and we're going to be able to make recurring revenue through all these different ways, right? And so it became more of a relationship on many different fronts, which is definitely something I see Tesla kind of playing out with over time. And this is, once again, these are things that I think are being missed in the Tesla story, but you're already starting to see the telltale signs there of adding up.
Overall, car companies are bad businesses, and they're different than tech companies. That is why they trade differently from tech companies. An example of this, a great example, is Ford, a car company. Ford trades at the same price it did in 1987, over 30 years ago. The only gains over that time period is basically the dividends it's paid, and that has not kept up with the market. Ford's earnings per share are not a compounder. They don't just continuously grow over time. Rather, they're highly cyclical and unpredictable. Ford's returns on capital employed overall are incredibly low, most of the time below the cost of capital. And more than that...
In all due respect to Joseph Carlson here, it's just a bad point. It's no different than saying... I don't know. Wish has trouble making money, so then Amazon can't make money, or Sears. Look at how great Sears was as a traditional company, and they have trouble making money. So Walmart's going to have trouble, or Amazon's going to have trouble. And it's it doesn't really work like that. Just because this old company has trouble with their business models, does that mean the new guys coming in have trouble?
They're also highly cyclical. This company never knows whether the investments it makes are going to be profitable. And again, the sensitivity to the economy, market cycles make this company overall, with its investments, very unpredictable. Even Ford's revenue is not very stable. It typically goes down a lot during recessions and takes a long time period to recover. Now, investors realize all of these things with Ford, and it's priced appropriately. Ford trades below a commodity multiple of a 12 Ford PE. That means that investors are literally pricing it as a wealth-destructive company, a company that does not create wealth above the cost of capital. They're pricing it at a 7 Ford PE. So all of these various concerns with Ford, the cyclicality, the sensitivity to the economy, the low returns on capital employed, the historically bad performance, are being priced into the stock by investors. It trades at a below commodity multiple with this 7 Ford PE. It's a very low multiple. And Ford, again, is not cherry picking. It's not unique in this. This is the car industry. Companies like GM trade at a 6 Ford PE because they suffer from the very same thing. This is an industry-wide problem with these investments. Now, the big outlier here, of course, is Tesla. This company does not trade at a 6 or 7 Ford PE ratio. Even after the dramatic 72% sell-off year to date, 50% over the past 3 months, the company still trades at a 28.8 Ford PE ratio, which is 4 times as much as GM and Ford. 4 times the price for this company's next year's earnings. And that's what raises this big question of if Tesla is different than other car companies. Because if Tesla is the same, around the same as other car companies, it deserves to fall in price by another 70%. That's the implications there. So we have to show that Tesla is different than other car companies by a substantial amount to be trading at 4 times the multiple. So let's go ahead and jump into this question. Is Tesla different than a car company? Well, a lot of people attribute different attributes to Tesla. One of them that I heard really frequently 6 months
Now,
to
Joseph Carlson, this is for you directly, okay? I was disappointed, I'll be honest, in you don't go into the numbers. Like, that was a perfect moment where you could have gone into Tesla's numbers and go into Tesla's margins, go into their operating margins, right? Go into how much of their revenue makes it down to that bottom line. I think there's a lot of different things, and I know you love to get into the numbers. I think there's a lot of great things you could have shown right there on how Tesla doesn't have these similar numbers to any of these other auto manufacturers. They're far exceeding them, right? And their profit per car is you look at Tesla's profit per car, that's perfect time you could have dove in right there, show Tesla's profit per car versus their competitors. I mean, my gosh, it's like Tesla's in its own stratosphere, essentially, right? And those are things that have to be factored in if you're trying to figure out valuation of a company and if it's appropriately priced or not.
a year ago was unlimited demand. That was one of the biggest talking points from Tesla bulls. I've heard it over and over and over again. Tesla doesn't have demand issues. It sells as many vehicles as it can produce. It's only limited by the amount of vehicles it can produce. In fact, we have people with interviews 1 year ago that say this pretty explicitly. Here's one of the most notable Tesla analysts, who is Pierre.
They have unlimited demand so far, 6 months wait times for all cars.
Unlimited demand so far, 6 months plus wait time. That's not a random clip. I'm not cherry picking here. I could find 24 clips of people saying the same thing on CNBC, Tesla bulls saying the exact same thing. Tesla has unlimited demand, unlimited demand, unlimited demand. Now, what's happened over the past year? Well, it seems like the unlimited demand thesis, that part of the thesis is starting to vanish. It seems like there's a little bit of cracks in that unlimited demand. Tesla shares are sliding on demand concerns. We have articles going back just a couple of months saying that there's a lot of price cuts.
And just to be clear about this, for folks that haven't been watching or studying this company for years, this isn't the first time Tesla's had demand concerns. I remember even being invested in the stock, and gosh, I think it was in early 2019, I want to say. Tesla was hit with these same exact demand concerns. And that was when Model 3 was just starting to ramp. And a lot of people were concerned about, does Tesla have demand? And demand's falling off for the Model 3. And there was a lot of bears that were attacking it during that time. And so just understand, this isn't the first time Tesla's had demand problems, supposedly, right? And it won't be the last. Maybe in a couple more years, 2023, there will be demand concerns, right? And maybe in 2026, there'll be demand concerns, or 2025, or, in a few years from now or something, right? So just do keep that in mind. And in all companies that produce a product like this do go through this. I've definitely seen it with Apple. A lot of times where Apple had demand concerns around iPhone and iPhone units, right? Anybody that's owned Apple stock for a long time has been through that several cycles of like, iPhone doesn't have demand anymore. The units sales are going to go down.
With the Model 3, to try to make it so that they can sell their current vehicles. They're cutting down prices, which is a clear indication that they have a lower demand. Companies don't lower prices because they have unlimited demand. Then we have other reports of Tesla not only cutting prices, but actually cutting output. So they're outright sizing down the amount of vehicles they're producing. Again, the only reason they do this is because of demand issues. Now, even though you don't hear this part of the thesis as much anymore because it's starting to be diminished a little bit, keep in mind this was a central thesis of many Tesla investors just 1 year ago. 1 year ago, the story of Tesla and why it was different than other car companies is it had unlimited amounts of demand. And we're just seeing that not happen. It seems like Tesla is starting to act and behave like other car companies with demand limitations, and it's starting to act like a cyclical company that's sensitive to the economy. We know what's going on right now. The situation has changed for the economy. We have the car dealership guy on Twitter that posts a lot about the car industry saying, imagine you're a 750 plus credit score rating, which is the highest score. Now imagine you come to buy a car and I offer you a 9% APR. Puke emoji. Rightfully so. Who wants a 9% interest rate on an auto loan? I don't need to say much more. High rates are killing the car business right now. They're crushing it.
He's 100% right. 100% right. There's no debating that, right? And Tesla, absolutely, like at the end of the day, you build cars, and I've spoke about this several times on the channel recently, like that's why I think Tesla's numbers are not going to be good in 2023. I really don't think they're going to be good in 2023. I hope I'm wrong, but I don't see Tesla having a great 2023. I think their growth is probably going to, I think Tesla over the next 5 years is probably going to grow at about a 32% clip on average. But I think in 2023, I believe the company is probably going to grow at about a 20% clip. That's kind of what my expectations are. I hope they grow faster than that, but I'm expecting actually like 20% revenue growth, which is significantly under where analysts are at. Analysts, as of just a few weeks ago, were at nearly 40% revenue growth. So I'm at about half that, right? So I think that's just kind of something to factor in there. It doesn't mean Tesla's a bad company or something like that. It's just, it's part of the process. In all companies, I think when the economy gets bad in a rougher space, like all companies get hit. It's just a question of like, how much do you get hit? I think that's the biggest question. How much of your business is hit if the economy weakens?
A year ago, the unlimited demand was closely tied to unlimited amounts of capital. You could get car loans for 1 or 2%. I have a loan for a car that is 2.1%. It's about as cheap as money can get. I get more in a savings account now. That's changed. That window of opportunity for all these car companies has vanished. The Fed jacked up interest rates so high, and it's going to take a while for them to come back down. And we're seeing this affect every car company, used cars, and the auto business as a whole. And what we're not seeing is Tesla being spared from these effects. We're seeing Tesla be affected by them with both price cuts and demand problems. We're seeing in the data itself, used car prices go down month after month after month. This does have an impact on the overall car industry.
And this will get worse before it gets better for everybody. So Joseph's bringing out great points here. There's no doubt it's going to get worse before it gets better. Now, the key thing is Joseph's bringing out a lot of great points, right? And a lot of the same views I actually have. But do keep in mind, these are all short-term things that will go away.
Investors are forgetting. If you can't get cheap interest rates on car loans and it goes from 2% to 9%, your car payment goes up dramatically. Most people can't afford that. They simply can't afford $1,000, $1,500 car payment. They could afford a $500 one or a $400 one, but once it gets into the thousands, that is unaffordable for most families. And they're not going to be buying used luxury vehicles or new luxury vehicles when they can't get cheaper credit. Now, to add on to those concerns, that brings me to the next part. If Tesla is not a car company and it's a different company, a different entity, a really quality tech company, then it's not going to be as economically sensitive as most car companies. But I don't know if that's going to be the case. I really am unsure about that. I think Tesla may be about as economically sensitive to the economy as most car companies. Not only is it affected by interest rates, but economically sensitive companies have a wealth effect. We have home prices going down month after month after month. When home prices go down, it makes you feel poor. When you feel poor, you don't buy high-end premium vehicles. We have the stock market going down dramatically. The S&P 500 down 20+%, the QQQ down 30+%. That has a massive wealth effect. People feel poorer this year than last year. And again, if most people feel poor, most people are going to be more reluctant to buy premium vehicles. So I look at the whole situation here and I ask myself, is Tesla really that much less susceptible to the overall economy than most car companies? And I just don't know. But I think it's very risky, and I think most investors are assuming that it's not when there's a good chance that it is, that it's going to be just as susceptible as most other car companies. Now we bring up the next point of the question, is Tesla another car company? One of the big moat advantages that lots of Tesla bulls have cited is that Tesla has a unique advantage with their gigafactories and with their manufacturing prowess. They basically are so sophisticated and so advanced with their robots and manufacturing process that they can manufacture these vehicles for a cheaper price, which raises their margins overall. And Tesla has gone to great lengths to...
This is Joseph's going to bring out this point here, and I think it's an interesting point, right? I don't know how many bulls are really invested in this company due to manufacturing. And I mean, if anything, I value more about how Tesla actually produces their cars in the way they do it. So not actually how they put the parts together, but how the whole design is done essentially. And I remember, something that definitely changed the game for me in regards to kind of my understanding around Tesla was when Sandy Munro tore apart the original Model 3. This is probably 4 years ago now or so. And Sandy Munro, who's, knows more about cars than I'll ever know, and certainly in my entire life or anybody else for that matter, right? He was tearing down the Model 3 and he was going through different parts and components of the Model 3 and showing that the way Tesla was doing all these things was so far ahead of what any auto manufacturer was doing. And all these cost savings and basically going through how Model 3 would actually be a very, very profitable vehicle over time for the company, right? And like I said, he's as much of an auto expert as anybody in the world, right? And he was just showing different things, different designs that Tesla was doing that was just ingenious. That it's just why has no one thought of this? Why is no one doing it this way, right? Even with Tesla, in the Model 3, obviously putting so you have so much just on the big, huge screen in the Model 3, right? And it takes away so many different buttons and actual buttons used to click and all these other auto manufacturers, right? And Tesla's just able to put it all in one screen and just have tons of simplicity and cost savings by doing that versus having, and it becomes more of a software experience than this hardware of I'm going to hit this button for the air conditioner. And that's the way cars are traditionally made, right? And so just Tesla's always thinking outside the box in these situations. And just to be quite frank, and I don't want this to be disrespectful. I really don't want this to be disrespectful to the teams at Ford or GM or Toyota or any of these other companies for that matter. But Tesla has, if you're going to stack Tesla's workforce against somebody, you're not going to stack them against Toyota and Honda and Ford and GM and Volkswagen. You're going to stack them against Google and Apple, okay? That's the type of workforce. You're going to stack them against SpaceX. You're going to stack them against the most impressive world-changing companies out there. That's who that workforce is going against. It's the creme de la creme. And many of the most talented folks either work at Tesla or work at SpaceX. That's just facts, man. And so I think that's very important to keep in mind. Doesn't mean these other companies don't have good workers, but many times even the good workers at some of these let's call it older companies, they don't have the leadership there to really change the game and really be innovative and be creative and do these outside the box ideas that Tesla's doing. They just don't. Even if you're somebody talented there, that's a very talented worker, many times you're not able to do what you want to do because you don't have that freedom, you don't have the leadership in place. It's not that sort of company. If you're a Tesla and you do something game changing, you're going to actually, that's actually a realistic possibility that could be implemented. And many of these other bureaucratic companies that have been around for 50 years, 100 years, 150 years, right? It's just not like that. And the leadership teams just aren't even looking to take that level of risk. It's maybe just trying to make this little thing a little better or something like that, right? So, once again, that's no disrespect to the other companies that Tesla competes with. It's just Tesla's in a whole different league.
Sort of show off their advanced manufacturing with these really slick productions. Look at this video here. This is from the Tesla YouTube channel. By the way, I just find this stuff so amazing and fascinating what we're able to create. It is incredible. I have to give Tesla engineers and the robotic engineers, I mean, this stuff is just fascinating.
To me, the most impressive things is drone work, man. Holy smokers, that's no jokers.
You know, I'm thinking about how they're filming this. Do they have some like world-class drone flyer in here just going in between the machines, hoping not to get stamped by one of them? Impressive. They got someone good with it.
I'm sorry for stealing your thunder there, Joseph. I didn't know. I totally missed that part.
On here. I really think so.
If you didn't know, a little fun fact about me, I used to be a drone pilot back when I had my real estate marketing company. So I was one of the first to, at least in Vegas, to actually implement drones for like photography and like filming of luxury properties and those sorts of things. It was a concept. I basically stole the concept from realtors in LA who were doing those sorts of things at that time, and I adapted out here, and it's actually how I got most of my big name like customers to build that business many years ago when I had that business essentially.
The Tesla Gigafactories and their manufacturing process is legitimately incredible. And I know why they would want to show this off, because it's incredibly impressive to show what they've done and what they've accomplished. But again, the question here is not if Tesla's impressive, but if it's different than a car company. Let's go ahead and look at another factory. This one happens to be by Ford. This is a walkthrough of a Ford factory by the YouTuber Jerry Rig Everything. And they invited him in. They don't have a fancy drone with an incredibly skilled pilot for that drone, but rather they just walked through and he filmed some of the process here. Now, it looks like Ford has like a different color schema here. A lot of it is this yellow and orange. But if you look at the robotics, I think it's pretty neat what Ford was able to do. They have, similar to Tesla, these gigantic hydraulic robots basically assembling every single aspect of the car. In fact, watching this entire video, you realize how little humans are doing now. Now, not only does it actually assemble it and build it, but he goes on to describe how this little robot here with that camera goes around and takes pictures of all the different parts of the truck to make sure that every single component is in the exact right spot. And if it's off by 1 centimeter, they'll have a human come and inspect it and look at what's going wrong with it, because they can actually do the checking with robots and cameras. Then they move it along with this big robot here that basically scoops the truck up and moves it along. And it goes through the assembly process. Humans do part of it. They just make sure the robots are doing their jobs. The humans do very little in and of themselves. And this is the process. When I looked through Tesla's Gigafactory, I think it is incredibly impressive. But then I look through Ford's factories and I think, again, they're incredibly impressive. And I think you should do the same, especially if you're a Tesla investor. Take a look at this video from Jerry Rig Everything. I'll put it in the description of this video. Watch the whole thing. It shows the entire process beginning to end, and almost everything is done by robots. They eventually test the truck in case it has any leaks in any part of it. They actually spray it down with water just to make sure no part gets wet. And then after a test drive by an employee, that's when it's finally good to go. It's cleaned off and you have the Ford electric truck there. So when I look at Ford's manufacturing process and I see that it's also very impressive and almost entirely done by robots, I ask the question, is Tesla that much different than Ford even in the manufacturing process? Now, I'm no manufacturing expert. Maybe there's some differences I'm missing, but when I look at both the factories and the walkthroughs of both of them, it looks like almost everything in both factories is being done by robots, completely automated. And the big idea here that Tesla is entirely different than Ford because of the manufacturing process, I don't know. Again, it's something that I think is a little risky. I don't know how different they really are. To me, they look very similar. So we have the thesis part 1. Tesla is different than a car company because it has unlimited demand. I don't really think that's the case. I think we're seeing that Tesla is more similar to other car companies with limitations to demand and economic sensitivity. Then we have thesis part 2. Tesla is different because of its manufacturing prowess. Again, I'm not really seeing a huge difference there. Maybe I'm missing something, but they look very similar to me. Let's move on to Tesla thesis part 3, full self-driving. Tesla's a tech company and not a car company because of its advanced full self-driving and the availability, the capability of their cars to be upgraded even after you buy them. So let's take a look together at the full self-driving. This is something that really would separate Tesla from any other car company. Now, luckily through the magic of YouTube, we have some content and some video footage on this as well. From Marcus Brownlee's channel, it's a great tech reviewer, one of the most popular ones, but he actually did a full self-driving, full drive, like a 20-minute plus drive on his way from his home to work, where he films in his studio. And I really liked him doing this because I think that he gave a very transparent, honest review of this. I thought it was very straightforward, and he describes the pros and cons of it. Now, this is him on the freeway, and he says that the best part of full self-driving, where it has it down best, is on the freeway. But he still describes the challenges with full self-driving. It gets stressful.
I'm going to show you actually what it's showing me on the screen, which is it's kind of picking a spot right now. Wow, that is assertive. That was an assertive move right there. Okay, that qualifies as assertive.
So he's saying it's assertive. Tesla, it was trying to get into this lane. It needed to, so it really cut in front of someone.
To be fair, if I recall, MKBHD put the car in like some sort of assertive mode or something like that when he was doing this, so it would make those sorts of moves. Like you can have it in these different modes, and it doesn't have to drive like that, from my understanding.
Move. So he goes through this drive narrating it, and Marcus says repeatedly that right now full self-driving would not be able to make this drive without his interaction, without him watching the vehicle. So even though it's called full self-driving, that's the label of it, it's not really full self-driving. It's more like a helpful tool to drive, but you still have to be on guard watching the car in case it screws up. In fact, in one part here that we're going to watch, this is where he had to actually interject and take over the car because it was about to do something he didn't want it to do, something that would not have been good.
Which is like 2 to 5 and then 5 to 2. Now it's going, this is not going to work if it doesn't see that it's, there's a cone here. It's not,
struggling with that.
I'm taking over. So that was bad. There's a cone over there. I took over, and I also need to be back over to the right, which this car didn't.
Now he's having to cut like across a huge lane into the second lane here.
So I'm going to go back into the correct lane here.
Now, again, I'm not trying to bash full self-driving. What they've accomplished so far is amazing, but this really isn't full self-driving. He has to be on guard and on watch the entire time he's making this drive. And in some cases, what I've heard from feedback from people I know personally that own Teslas, I have a couple friends and people that I work with that own them, they say that in some cases, full self-driving from Tesla is almost more stressful than just driving yourself. It's almost like having a student driver. It gets it right in most cases, but you still have to be on guard. You have to be ready to take over the steering wheel because they might make a dumb choice. And so you're almost on more guard and more stressed out than if you're just driving yourself. That's the feedback that I've often received.
I don't want to speak to full self-driving, but I can tell you from the autopilot experience on the highway, it's absolutely magical. And that's another reason that it's hard to go to other vehicles that don't have that autopilot experience, like to be able to just, especially if you're on like traveling between states or something like that, and you're on a 2-hour, 4-hour, 6-hour drive, to be able to put on autopilot. I mean, it handles highways so well, it handles speed so well. The car's slowing up, so the car automatically slows up, and you basically don't have to kind of worry about anything. Now, like a drive like obviously MKBHD was doing there, right, which was, much more complicated, right? And he was doing city streets and all those sorts of things. It's much more complicated driving. And Tesla doesn't seem to be 100% there. It's getting pretty dang close, which is crazy, but it seems like it's not quite there yet from what I see. But in terms of I would call it 95 to maybe even like 97, 98% of driving now, like the car can do for you. It's pretty epic. There's that 1 to maybe 3% that you still have to have the inputs, like MKBHD there did have to. In terms of stress, I think that's just more of a trust factor that people are going to have to deal with, right? It's no different than I have trust issues. I don't, when I go flying somewhere, I'm not the type of person that sleeps. Guess what? If you're with me, I'm almost always going to drive. I mean, it's not like I don't trust the other person, right? It's just I trust myself more to drive, okay? And so that's just me. I have little trust issues, right? So, but for me, actually, with autopilot, actually, I don't have much trust issues. I obviously keep an eye on things, but I don't have nearly as many trust issues as I think some other folks do. But I think for a lot of folks, it's just kind of like a mental barrier of like, wow, I'm really letting the car drive for me. And I think that's just like a mental barrier you kind of have to get over, right? And, I think that's just something we all have to deal with. You fly in an airplane and it's like, what if we just fall out of the sky right now? We're so high up. You know what I mean? Like, I think that's just an anxiety issue that you just have to kind of work through over time. And it just takes time. And as cars get more and more advanced, Tesla specifically, I think it's just going to come more natural that people will trust it more and more over time.
In either case, Tesla does not have full self-driving. Full self-driving would mean that you can punch in a location, you can recline in your chair, close your eyes, or you can recline and watch YouTube or Netflix and not even worry about the road. That's the true definition of full self-driving. Tesla simply isn't there. In fact, because the term full self-driving is a bit of a misnomer, it's kind of an overstatement for its capabilities, California has outright banned Tesla from calling it full self-driving, saying they cannot sell it under that label anymore. And that's one of their biggest markets. So the full self-driving aspect of Tesla is cool. I think it's very impressive, but I don't think it's a home run right now. It's not gotten to the last step of being totally, fully autonomous and not having anyone have to interact as it's driving. And at the same time, again, if we're asking the question between the Tesla and different vehicles, a lot of vehicles can aid drivers on the freeway. Just like the strongest point of full self-driving, there's many cars now that have cameras and sensors, and they realign trucks, they realign cars if they're starting to go off the road. They warn about trucks. They'll automatically press the brake if you get too close to another car. I've actually seen that happen where a non-Tesla vehicle slams the brakes because a car in front of it is getting too close. Now, this probably is not as advanced as Tesla by any means, but it is there. Cars outside of Teslas are doing some of these functions. Now, again, the problem for...
It's true. The main issue I see and I had to rent a car when I went to the South. I went to the South a few months ago, and I had to rent a car, a non-Tesla. And it was interesting driving that for many various reasons. But one of those, the car actually did have one of those kind of like assisted, I want to say almost wannabe like autopilot programs, right? And I don't know if I really felt as safe in that as I did, obviously, Tesla through its autopilot, right? But one of the other features was just like, I would have had no clue, like this vehicle even had that, to be quite frank. So I think, everybody knows Tesla for the fact that the car can drive you. Like everybody knows that, right? That's a huge like brand advantage versus these other auto manufacturers. Even if they do have that, people don't even know about it. Like literally people don't even know about it. If you're thinking about, I'm going to get one, an electric vehicle, or two, a vehicle that can drive me, like Tesla's always going to be the first decision because that's the one that's branded as that. It's branded as electric vehicle and drives you. All these other companies have to try to prove and overweigh that of like, hey, we make electric vehicles too. Hey, we can do some driving features for you, right? And that's hard when you're coming as like the guy that's trying to be like, hey, look at me, versus a guy like, I am that guy, right? So I just think that's something else we have to factor in there that I don't think is another thing that's talked about enough.
Tesla right now is that if it's not full self-driving, then it's something other than full self-driving. And that has huge implications. Tesla cannot run a robo-taxi network. They can't have the massive economics implied in a lot of valuations unless they get to that end point.
There's nothing implied in those valuations, Joseph. Run the numbers, man. Look at the P, look at the forward P. And if you were to make an argument like, well, Ford's at a 5 or 6, that's a silly argument, Joseph, and you know that. Look at Tesla's growth rates and look at Ford's growth rates. What's Ford going to grow at in 2023 and what's Tesla going to grow at in 2023? What did Ford grow at in 2022 and what did Tesla grow at in 2022? What did Tesla grow at in 2021 versus Ford? What about 2020? I think these are factors that are obviously very important. And Joseph, you know as well as anybody how to run valuations, right? So, you can't just like be like, I'm not going to look at that stuff.
Really have fully autonomous, full self-driving. And at the same time, there's been a lot of predictions, a lot of promises from Elon Musk that this is right around the corner. This is back in 2014.
Next year will probably be 90% capable of autopilot. So 90% of Model S and Model X at this point can drive autonomously with greater safety than a person right now. We're still on track for being able to go cross country from LA to New York by the end of the year, fully autonomous.
But next year, for sure, we will have over 1 million robo-taxis on the road.
I'm extremely confident of achieving full autonomy and releasing it to the Tesla customer base next year.
Tesla will solve level 4 FSD.
I mean, it's looking quite likely that it will be next year.
So Elon Musk has been...
Yeah, I mean, in my opinion on that, I think Elon just figured out over the years that, damn it, man, it feels like we're always right there, but it's like, you know, it's still a ways away. The bottom line is, at the end of the day, Tesla's made tremendous progress. It's getting really darn close. You know, you could watch MKBHD's video in how many different scenarios and situations that Tesla had to handle, right? And I mean, that technology is getting really freaking close now at this point in time. You know, if you look at where that technology was at 5 years ago, even 3 years ago, even 2 years ago versus today, it's getting there, man. You know, it's got a little more work there, but I can tell you it's getting really darn close. And perfection is, or near perfection, I don't know if there's ever such thing as perfection, but near perfection is coming sooner rather than later.
These repeated promises of full self-driving going back all the way to 2014. Every year it's a year down the road, or by the end of this year, they're going to make the next big breakthrough with full self-driving. Here we are in 2022. Almost in 2023, we have Marcus Brownlee driving his Tesla 20 minutes from his house to work, and he has to take over the vehicle twice, 2 times in 20 minutes. That's not close to full self-driving. It's impressive, but it's not full self-driving. Now, maybe he'll get it right next year, and that'll be the year that it actually has full self-driving.
I mean, to be fair, Joseph Carlson, who else is doing that, man? Who else is doing that? The man drove all that way, all those city streets, all the construction and crap he had to go through, and only had to overtake it twice? Who else is doing that? You know what I mean? Like, that's insane.
But as of right now, with the data that we have, people drive Teslas, not the car. The car does not drive itself, and people drive Fords. They drive Ford trucks. In both cases, people are driving the vehicles. People have their hands on the steering wheels. People are braking. People are looking through the windshield and making judgment calls. And even if the Tesla can do some things to aid in the driving, it's still people that have to be watching over it. They're legally mandated to make that happen. So again, looking back on all of this, I'm not trying to bash Tesla. That's not my goal here. I think it's an amazing company, and I think it's incredible what they've accomplished. I'm glad the company exists. But when you're paying for a stock, you're paying a price, a set price for the market cap. Right now, Tesla's a $350 billion company. And
by the way, and I can show you a lot of videos where people are sleeping while their Teslas drive them around, right? You know what I mean? Like we can pull these different videos and show these different things, right? Some people feel so comfortable that literally they'll sleep while the Tesla drives them. I do not advocate for that. I wouldn't personally do it, but there's a lot of people out there that literally they'll just sleep. And that's why Tesla had to add in that feature where you have to move the steering wheel a little bit essentially, because people would literally just have the car drive them around and just be sleeping. That's a little wild for me, but people do it.
A lot of the thesis surrounding the implied market cap and these huge predictions about a multi-trillion-dollar company, or in Elon Musk's words, the biggest company in the world, I think it's difficult to get behind it, at least for me. I don't see Teslas having unlimited demand. I see them being affected by interest rates and being sensitive to the economy. I don't see Tesla's manufacturing process as all that different than competitors. I don't see full self-driving as really being full self-driving. I see it as something cool, but it's not autonomous driving quite yet. And I think the company's valuation implies something that I'm not seeing with the fundamentals of the company. And if Tesla is a tech company, we can compare it from not even car companies, but we can compare it to other tech companies. Let's compare Tesla to Adobe, for example. Adobe trades at a cheaper price based on next year's PE ratio. Even if Tesla outperforms and does $5 in earnings per share next year, higher than most analysts' expectations, Adobe's still cheaper. It still trades at a lower PE ratio. Adobe has a much higher free cash flow yield. So for the price you're paying for the market cap, you're getting a lot more actual free cash flows. Adobe has incredibly fast-growing revenue, very Tesla-like revenue, but the difference is Adobe...
Damn it, Joseph. This is not fair, man. Dude, come on, Joseph. You know better than this, man. Adobe's been around for a long, long time. This is a well-established, well-developed company, right? You own the stock. I own now a small amount of this stock, right? you shouldn't be comparing to Tesla. Look at Tesla's revenue growth rates and look at Adobe's revenue growth rates. Like, look at where Tesla's going over the next 10 years versus Adobe. Both companies have great futures in front of them, but they're at very different stages of their companies, right? Look at Tesla's net income growth over the last 3 years. Look at Adobe's net income growth over the past 3 years. Look at their revenues over the past 3 years. You can look at these metrics and these companies shouldn't be compared. And I don't like how you're now bringing up like valuation metrics when you kept comparing them to Ford. And it's like, if you want to compare the Ford, because that's what you kept bringing up, right? Example there, put it against Tesla and show me revenue growth rates of Ford versus Tesla, net income growth, the margins. Let's go through that, right? And where those companies are valued at PE-wise, forward PE-wise, right? Trailing 12 month, let's look at that.
Revenue is almost entirely reoccurring. It's almost all subscription-based. Tesla's is off of large, lumpy sales of vehicles, which are difficult to sell during economic slowness. We have Adobe's free cash flow, incredibly good. High free cash flow growth, and low amounts of stock-based compensation, similar to Tesla. But again, very good free cash flow growth while being subscription-based and not having as much cyclicality. Adobe has been doing share buybacks while Tesla has been diluting the shareholder, issuing more shares. Adobe has higher returns on capital employed by quite a bit. Adobe has higher gross margins. Adobe has higher operating margins. Adobe has higher profit margins all across the board. And they're very consistent because, again, it's a subscription tech company selling software. So I don't know what I'm missing here, but when I look at this, I'd rather just buy something like Adobe than something like Tesla. That's my thoughts for now. I hope you enjoyed the video. Let me know what you think.
I think you're missing a lot in all due respect there, Joseph Carlson, sir. I think you missed a lot in this video, man. I'll be honest, and that's why I wanted to react to it. I think there's a lot more you could have done here around valuations. You would love to pull up the numbers, and I think you could have done that very, very well. And, some of the points I agree with. Some of those points you make, obviously, I agree with, and especially in regards to, potentially the next year, economic worries, how they could hit Tesla's numbers. Those are concerns I have as well, right? But at the end of the day, when you really, add up these things and the progress the company's made, how early days this company is. I mean, let's not forget, this company just scaled its first mass production vehicle 4 years ago. This company is so early days into their growth area, right? So early days into their margin story, their profitability story. I mean, this was a huge money-losing company just a few years ago, right? And look at how much progress they've made this fast. Think where this company's at in 5 years from now, 10 years from now, right? On the trajectory this company's on. So, I just think those are all factors that have to be considered as well. So I appreciate that. Thank you for the video, Joseph. I hope you enjoyed this reaction. It was kind of a beast one, man. But I thought it was worth reacting to. Thank you, everybody that subscribed to the channel. I appreciate y'all. Much love as always. More reactions coming, and have a great day.